Hey everyone, welcome back to the channel. If you're passionate about the trading or just getting started, you are in the right place. In this video, we are diving into how to start day trading using a CLS, a powerful model you can apply mechanically and consistently. And if you haven't already seen any video about a CLS series where I have introduced and broke down its types of the entries, make sure you check them out. And hey, if you love trading content like this one, smash that like button and subscribe to join our Trading Hunters community. Let's build your trading career together. Today's focus is about a daily CLS model, how to identify the right candles, and more importantly, where to trade them. Always remember, time is more important than price. When time aligns, everything else falls into the place. We will walk through which weekdays to watch, how candles behave, and exactly what to look for your charts. Stick around till the end of the video because I also break down two high probability CLS models, the Monday range and the Thursday reversal, with the live chart examples. So let's start. Each weekly candle is made of 5 daily candles, but not every day gives you an edge. And we will break it down into the 3 sets. Why those sets? Because the market structure, liquidity manipulations, and timing often align around these patterns, especially when you are trading the CLS daily range. Your entries became much more precise. The Monday range model. Let's start with one of my favorite models, the Monday range. It's perfect if you are trying to plan out trades for the rest of the week. Here is how you will trade it. Wait for the Monday close. You need to see a Monday range candle to be created. This is your CLS range, so you need to mark it out, right? And then you are waiting for a manipulation. But what is the manipulation and where it needs to go? Basically, if your CLS candle didn't take out any liquidity, then it needs to dip below some liquidity level which is lower, right? And below that has to be a key level. So what is the key level? Key level can be a order block, breaker block, or the fair value gap, right? So now imagine we have our Monday CLS range, right? And then we are waiting for a manipulation into the key level. And in there, we are looking for the engulfing. Not just simple engulfing, but for the change in the order flow, which means that the last down candle has been engulfed by another candle. It can also be last consecutive candles engulfed by one candle, creating also the fair value gaps. If that sounds too complicated for you, join our Discord because I'm explaining all of this in details in there. So right now, when this is happening, this is our confirmation that we can trade the model number 1, which is targeting into the 50%. This is how we can build our setup with our entry and our targets. Here is the trick. This trade not always offer the best risk reward setups. So sometimes you need to wait for the model number 2, or there is another option. We can use the multi-time frame analysis and we can basically scale our trades. If here was created a manipulation in this down candle in here on the lower time frame, there was most likely also created lower time frame CLS range, right? So in here was most likely lower time frame CLS range. And what has happened in here? Basically the same thing, right? So let me zoom it out a little bit for you. And here we would be doing completely same thing, right? Again, we have CLS range and waiting for the manipulation which has happened in here. And then entering on the change in the order flow, right? So how it would look like, it would look like something like that, right? So if this higher time frame, this bigger CLS range is our Monday range, and we find the lower time frame CLS range, let's say on the 4 hours time frame, we will be entering with the M15 because this is a correct time frame alignment for the 4-hour CLS range, right? So I will be entering in here and I will be placing my stop below that manipulation, right? Why would my stop loss be safe in there? Because basically when this move down has happened, most likely the traders has been trapped into the short, because in a specific moment the candle which was created here on these lows, it was looking very bearish, right? It's the candle which was convincing so many traders that price will continue lower. So they entered and it's all right. They did their homework, they've been studying the books. But mostly in these books, it's bullshit, right? So that's why they are trapped in the trade. And where the price going next? Into the next opposing liquidity, which would be above these 4 hours highs, maybe some highs in here, and maybe this 50%, right? So this is our model how to trade this model number one, and it gave us a very powerful strategy. And as we have been talking about a Monday range, this mostly happens during a Tuesday, right? Because why? Mostly we have a Monday range accumulation. It's an initial balance for the whole week. Tuesday, you got the manipulation, right? So basically, knowing this information, you do not have to work on Monday. You do not have to trade on the Monday, and it's perfect. Imagine that you are having a job where you basically don't go to the work on the Monday. It's a perfect, right? So you're waiting for your Tuesday's manipulation, right? And this obviously doesn't play always the same. This manipulation can form on the Tuesday and also on the Wednesday. But here's the tip. If this happens during the Tuesday, let me highlight just this one, right? Monday, CLS, right? Then we have another candle manipulating in here, because this is what we have in here. It's a lower time frame, right? So we have some Tuesday candle in here, right? Obviously this candle has a wick, right? But I'm not drawing them. These are having the wicks, right? Some small wicks. The wicks are also the part of the CLS range, right? Sorry for the drawing. I'm not the designer. And we have this manipulation in the Tuesday, right, on the 1 hour, because it's our entry time frame, and we can see that 1 hour is starting to make higher highs, right? And that is also a signal for us. Why? Because Wednesday is mostly continuation day, right? So if this already happened in the Tuesday, then on the Wednesday, you have higher probability that the Tuesday has created low of the week, right? So you basically entering a continuation trade. But also the Wednesday is mostly a day when we have FOMC or CPI, right? Which is a very sensitive data release, because the Fed can change the interest rates, or currently the Jerome Powell is commenting about a economy, right? However, I do not believe that these news are changing the direction which is already pre-programmed into the market. But anyway, we can have this news in the Wednesday. That means that the Wednesday can also go lower below that Tuesday low, and the low could be created during the Wednesday, right? So this is basically how you trade the Monday range. And I give you just one suggestion right now. Go to your charts, put it on the daily time frame, and highlight ranges like this to the Monday ranges, and do that just few months into the history, and you will see magic how this is happening so often. And if you pick up a 4 Forex pairs and 4 crypto pairs, you will find setups every week. And remember, you don't need to trade every day. You just need to find high probability setups. So this one was a Monday range, right? Then we can trade, which I already have shown you, the Tuesday low and the Wednesday continuation, right? And now we will look to the Thursday. Thursday has also the specific. So what's happening on the Thursday? If we have the situation which already plays out in here, and the Wednesday is continuation, then Thursday will be also the continuation, right? So it will mostly make a higher high, right? And it can go up into the CLS range, which would be basically completed model number 1, right? And the Thursday also have one specific. If the market was moving on the Thursday, mostly comes the reversal, but reversal doesn't come just out of nowhere. It comes only when the price arrives into the key level, right? So if we have our key level in here, right, and the price arrive into that key level and it's a Thursday, you have high probability that the price will at least pull back or reverse, right? So what does it mean? We can take advantages on that because look, you have Thursday, right? And imagine price is not already on the key level. So you know that price will most likely continue in there. So you can position yourself on that continuation. But once you have a Thursday, price is on the key level, and you have, for example, some news, some data released in the US session, then most likely you can expect a manipulation and the reversal. And this is how you're using a CLS timings in the days, right? So remember these few rules. I suggest you to watch the video again and take the notes. But here is one thing I want to tell you. Obviously, this is not perpetuum mobile and markets are not always same. However, if you study this diligently, you will find out that these patterns are happening quite often. So now we basically went through the 3 very powerful CLS models: Monday range, Tuesday, Wednesday low, and Thursday possible reversal. And this is not just random strategies. They are structured, repeatable, and tested. And if you focus just on the one and backtest it and apply it consistently, you will start seeing serious results. Let me know in the comment section if you learned something, and if for the more tips, breakdowns, and trade ideas, join our Discord Trading Hunters. Link is in the description of this video. And if you are serious about mastering the trading, check out Full Trading Academy. There is no pressure, just real value. Don't forget to like this video, and if you found it helpful, subscribe also, because I will provide you amazing content which will make you fucking rich.